Hey guys, welcome back to my weekly options video series. In today's video, I'll be sharing with you my options trading game plan for the upcoming week. Once again, if you're new to trading options, I will definitely recommend you to start paper trading using the Thinkorswim platform first. I hope you'll find today's video useful. As usual, I will start off with a quick recap of the opportunities I talked about in my last video, so let's get started. So just a quick recap of the general market for this week. This has been a pretty good week for the stock market. You can see that the S&P 500 is making all-time high almost every day this week. And in general, I think this week we saw strong US retail sales number. China also came up with their GDP number, which was a very good number, 18% quarter-on-quarter growth. And I think this pretty much supported the market sentiments for this week. So if you look at the charts for Dow Jones, it's pretty much the same story as well. Dow Jones closed at a record high on Friday. So this rally is really not just concentrated on the tech stocks or the S&P 500 stocks, but broader in the general market sense. And I think this is a pretty good story. So moving forward, there's definitely more room for the upside. We did not see any major retracement this week. But moving forward, this is something that we definitely need to be conscious of moving forward as the market goes higher. So coming back to my options trading positions, if you recall in my previous video, I did mention that I already closed 2 out of my 3 Microsoft diagonal spread positions. I still have one more long call position from Microsoft, which I had the intention of closing early this week. And I eventually did close this position on Monday. On the 12th of April for a credit of $42.60. So I'm totally out of my Microsoft position already for a profit of almost $5,000, which I say would be a very, very good run for Microsoft. But the prices of Microsoft did, however, went higher towards the end of the week. But it was a no regrets decision for me because if you look at my long call, it's actually due to expire in May, which is about a month from now, and I just didn't want to take the risk for Microsoft. It has been a really good run, and I hope you guys who watched my earlier videos also benefited from this trade as well. And moving on to the next position would be Apple. So if you recall, I also have a diagonal spread position on Apple, 4 contracts in total. In last week's video, I mentioned that I already closed all the 4 short calls. So what is left for Apple as of last week was the 4 long call positions. And I had the intention of taking some money off the table for the long calls. So I actually took 2 long calls off I actually closed the position for 2 of the long calls on Tuesday, yeah, on the 13th of April for a credit of $26.35. So I've closed out 2 of my 4 positions. The 2 positions that I closed out was for a profit of almost $2,000. And what is outstanding for Apple would be the other 2 long call positions. I actually do think that there's actually more room for the Apple stock to run. So that's why I'm keeping the long call positions open. If you look at my long call positions, actually due to expire only in June, so I have quite a bit of time. And I think the Apple earnings, it's on the 28th of April, which is the end of the month. And I definitely think that the stock has a lot more room to run before the earnings. So I'm just keeping these 2 positions open. So as you can see, I've already split up these 2 positions because I've already closed part of the position over here. So the other opportunity that I talked about in my previous video was Nike. I did mention that if there was a bullish signal this week, I would also enter a similar diagonal spread for this as well. And on Monday, 12th of April, I did enter 3 contracts for Nike. And if we were to look at the chart, the daily candle chart for Nike, 12th of April, that would be this candlestick. I actually did enter 3 contracts for this. But towards the end of the week, you can see that the prices of Nike did fall slightly below the 150-day moving average. But as of Friday's close, it is still sitting very nicely on the 150-day moving average. And if you also recall, I did mention that the $132, $133 will likely be a strong support level for Nike as well. And if you also head over to the weekly candlestick chart, you can see that Nike is very supported nicely on the 20-day moving average as well. So there's quite a lot of support level at this price, and I do expect prices to continue to hold, and we shall see what happens next week. The other opportunity I did mention in my previous video was also Zoom. And I did enter a diagonal spread position for this as well on the 13th of April, which is Tuesday. I entered a total of one contract for this. If you look at the daily candlestick chart, 13th of April will be here. This was when I entered my diagonal spread position for Zoom. And as of Friday's close, you can see that it's sitting very nicely on the 20-day moving average for the daily candlestick chart. And separately, if you were to look at the weekly candlestick chart, it's also hovering very nicely on the 50-day moving average as well. So hopefully prices don't go up so quickly and I can earn some money from my short call. But we shall see what happens next week for Zoom. So the other opportunity would be JD.com. If you recall last week, I also did mention that the 200-day moving average is likely going to provide some support level, but seems like it has broken past the 200-day moving average, so I didn't take any positions on this yet. But seems if you look at the weekly candlestick chart, you see that there's a support line at the 50-day moving average on the weekly candlestick chart. But I'm not too sure if this is going to hold up prices for JD.com. I've not entered any position for this yet, and we shall see what happens next week. Overall, if you look at the China market, for example, if you look at GXC, so I would say that the Chinese market has been pretty muted over the last couple of weeks. So if you look at the charts of GXC, which is an S&P equivalent in China, prices have pretty much retraced from their all-time high in February, down about 15% to now where it is. But it seems to be finding support on floating around the 200-day, 150-day moving average. I don't think prices will go any further lower than that. I think the correction is pretty much overdone, and over the next couple of weeks, I do expect to see some rebound in the Chinese market, particularly in the tech sector, which has been pretty much beaten down over the last couple of weeks. So the same goes for the stock Alibaba. I think if you recall in my previous video, I did mention that if prices continue to hold at the $223 price level, I will likely enter a diagonal spread position for this. Unfortunately, when the market opened on Monday, prices gapped up to the $240 price level. This is after the news that Alibaba will be fined about almost close to $3 billion by the Chinese government. I guess there's a lot more certainty after the news is released, so there are more people buying into the stock right now. I didn't manage to enter a position for this. I didn't want to chase Alibaba stock, so I will likely wait for a retracement. And now it's hovering around the 50-day moving average, so hopefully prices will continue to be supported here. But moving forward, I do feel that the entire Chinese tech sector has been pretty much oversold. Likely in the coming weeks, there's likely going to be some rebound, and I do want to position for that. So if there's an opportunity next week, I will be definitely happy to enter some positions for Alibaba and JD.com. So that's pretty much the recap for what happened this week. Let's move on to the opportunities for next week. So in today's video, I'll be sharing with you three trading opportunities. The first trading opportunity would be Disney, ticker symbol DIS. So if you look at the chart for Disney, prices have been pretty much supported at the 50-day moving average, which is the line in blue. So going forward, I do expect this to be a strong support level for Disney. I have already entered a position for this. So I entered it on the 15th of April, which is the red bearish candle that you see over here. So my strategy for this is that if prices fall below the $178 price level or below the 100-day moving average, I will likely cut loss and close the trade for a loss. If you look over at my Excel spreadsheet, so for Disney, I entered the position on the 15th of April. I entered a total of two contracts. Right now, it's still showing a little bit of red. but I do expect prices to be supported moving forward on the 50-day moving average, and we'll see how it goes. So the next opportunity that I'll be sharing with you would be Plantier, ticker symbol PLTR. So I've been monitoring this stock for the last couple of weeks already, but I still haven't managed to find any good entry setup for this as well. As you can see, prices have been pretty much supported on the $22, $23 price level and hovering around there for the last couple of weeks. So hopefully it will be able to find support at the $22, $23 price level, or even the 20-day moving average, which is the line in pink. So I've not entered any positions for this yet. So hopefully next week, if there is a bullish signal, or if prices are supported at this level, I will likely also enter a diagonal spread position for this as well. So the last trading opportunity that I'll be sharing with you this week would be for Domino's Pizza, ticker symbol DPZ. So if you have been following my channel and watching my videos over the last couple of weeks, you've realized that almost all my trades are all diagonal spread, and that's because I like the strategy a lot. So in this week's video, I'll be sharing with you another strategy which I employ pretty often. That would be the double calendar spread, and this is purely for an earnings play. So Domino's Pizza is actually releasing their earnings on the 29th of April, right before the market open. And I've actually already entered a double calendar spread for this. So the reason why I like the double calendar spread a lot is because if you look at the screenshot over here, the profit zone is actually pretty wide. So for this particular trade, if prices were to remain within this $359 price level, which is here, and the $443 price level, which is here, so if prices are remain within this band, before the earnings, I will pretty much collect a very decent profit for this, and that's what I really like about the double calendar spread. So if you take over a look at my Excel spreadsheet, this is where I entered my double calendar spread for Domino's Pizza. So it's a four-legged strategy. I've entered a total of 15 contracts on the 13th of April. So right now the P&L is showing at 2,670, but I think this number is not accurate, simply because every time after the market close, the price feed from Thinkorswim can be a little bit wonky. So I wouldn't trust this number as of now, but overall I still think that this strategy will be a very good risk to reward ratio. So especially for those with very small capital account, and you can actually deploy such strategies very easily. So one important thing to note for this particular earnings strategy is that you need to close this double calendar trade before the earnings are released. Otherwise, when the earnings are released, the volatility crash will actually destroy all your earnings for the double calendar spread. So for Domino's Pizza, their earnings actually will be released on the 29th of April before the market open. So I need to close this strategy on the 28th of April, so that I don't get hit by the volatility crash. Yeah, so overall, I still think this is a very good strategy that I employ pretty often. So hope sharing with you guys, and hopefully you can benefit from this as well. So that's pretty much my trading plan for next week. I hope you have found this video useful. If you have any questions or suggestions, feel free to leave them in the comment section below, and I'll try my best to answer them. If you're new to my channel and enjoyed watching this video, be sure to subscribe, as I post videos like this every Sunday and sometimes on Thursdays as well. Happy trading, and thanks for watching.